I had the pleasure of meeting my next guest when I had a chat to him about his feature article in Australian Property Investor magazine, which is out right now. And I wanted to bring him into the show and have a bit more of a chat to him as well. Stephen Ryan turned a very negative event into a very positive outcome and consequently went on to build a really nice property portfolio. You can read his full story in the latest edition of API magazine, but he joins me on the show. Stephen, thank you for your time.
G'day, Kevin. Nice to speak to you again. How are you, mate?
Yeah, I'm very well, thank you, my friend. Let's talk about your journey. When was it that at a very young age, you decided that you wanted to get into property? Why was that? What made you make that decision?
Yeah, I guess it's a combination of two things. I had a short stint in hospital and spent a year not being able to do too much physical activity there, so I had a kind of an introspective year or so there when I was around 18 and just decided in that time that I really wanted to make a good go of life because you only live once and it can end pretty quickly. And a few years after that, my parents divorced and didn't really have too many assets to their name after that. And I realised after a lifetime of hard work that despite the fact that they'd really put in the work and stuff, they hadn't really ended up with too much and got themselves into a great financial position. So that's the kind of the point where I realised that I wanted to make sure that I set myself up and then try and help a lot of other people to do the same thing. Pretty
much from ground zero, really, wasn't it? I mean, how did you get started?
Yeah, well, I had been renting in Sydney for 4, 5, 6 years, somewhere like that, and I've been thinking about investing for a little while. And I got notice from a real estate agent that I was going to need to vacate my rental. So I'd been saving a deposit. It wasn't quite there yet, but I had in passing, I was talking to my dad one evening and mentioned that I was moving out. It's a shame that it wasn't a few months later I'd be able to buy something, and he said he'd happily spot me the difference in the deposit if I needed it. And from there I went on a mad hunt to try and find something, so it moved pretty quick from there.
And what was your first purchase? Tell us about that.
It was a one-bedroom apartment in Marrickville, a really nice complex, no common walls. It's deep enough the street as well, so it's nice and quiet but really close to transport and stuff as well. So that was really just a lifestyle-based purchase. I wasn't sort of thinking investment at that stage. Just wanted something that was, close and convenient to transport, but not, sitting on a main road or anything along those lines.
Do you still own that property?
I do, yeah. I'm speaking to you from it right now, actually.
Okay. And from there, how long did it take you to decide to get to your next property?
It probably would have been I think it was 3 years. I'd started saving some money, and I knew investing was a great thing to be doing. So I started saving pretty much immediately for the second purchase. And I worked pretty hard, saved some dollars up there and spent some time researching. And maybe about a year and a half after I made that initial purchase, I really just immersed myself online and started talking to the right people, getting advice and input on how to build a portfolio and how to move forward and stuff. So basically ended up making my first purchase almost the first day I could after I got my finance in place and stuff. So
you did a lot of research there, didn't you? Hunting around getting some ideas. How important was that for you? I mean, did it actually save you, do you think, from making a few mistakes?
Oh, absolutely, Kevin. I mean, I'm pretty analytical in my approach with stuff, so I wanted to make sure that I'd looked at all the different options and scenarios and stuff. Everything, from looking at NRAS properties, which you may have heard of, right through to thinking whether I'm just chasing cash flow or capital. Researched pretty much across the whole country in terms of different locations, trying to see growth drivers there. And it turned out after all that work, after about 18 months of looking, that I realised where I'd actually bought my first place was probably the best place that I could invest again, which gave me a big advantage because being on the ground there and having rented in the same suburb for years prior, I really sort of had a finger on the pulse of what was going on and knew the nice streets, and so that made my purchasing decision a little bit easier. When the right place came up, I just bounced on it.
Okay, and that was in the same area that you're in now?
Yeah, very close by actually. Okay.
So what about number 3?
Similar story, I guess. Same area again. This one was a bit of a difference though. I had literally purchased my first investment, I think it was about 4 months, something like that, 5 months prior to the second one. And I'd managed to get that first one under value when the market was moving up very quickly. So I ordered a revaluation the day that I could, and I think that was 90 days after settling. And I had a pretty nice result from that, which gave me the confidence to move into a second purchase. And conveniently, a couple of weeks after that valuation had come back through, an out-of-town agent listed a property online which failed to mention some of the major selling points, its particular location, and the photos weren't great. So I sensed a bit of an opportunity and put an unconditional offer in on the very first open house and snapped it up later that afternoon, took it off the market so that it didn't get to auction.
Yeah, the lesson there is that you were ready for it and you'd done your homework and you were ready to pounce, I guess, a great lesson. How big is your portfolio now?
At the present, it's around about the 1.6 million mark, including my principal place of residence. I'm looking at continuing to expand over the next few months and next few years, of course, but I've got a pretty solid foundation there now. So,
well, that's fantastic, mate. We are out of time, unfortunately, but I really appreciate spending this time with you, and full marks to you too for wanting to share the information and your experience. I think it's wonderful. You want to help other people.
Yeah, no, absolutely. I mean, a few of my workmates, friends and colleagues and stuff like that, I'm sort of sitting down and helping them build plans to try and replicate the same sort of deal. Because I know, once you're armed with the knowledge and confidence, it's a pretty easy process. You just have to, put the work in.
Indeed. My guest has been Stephen Ryan. You can read all about Stephen in the latest edition of API magazine. Stephen, thank you so much for your time and all the best for the future, mate.
Cheers, Kevin. It was a pleasure talking.